the feeling.
What is interest rates? An interest rate is the percentage of the principal charged by the lender for the use of its money. The principal is the amount of money loaned. It is either the cost of borrowing money or the reward for saving it.
Interest rates can be applied over different periods, such as monthly, quarterly, or biannually. However, in most cases, interest rates are annualized.
Next is the different types of interest rate. First is the fixed interest rate, which is the most common type of interest rate, and as the name suggests, the rate of interest is fixed. Next is the variable interest rate, which is just the opposite of a fixed interest rate, wherein the interest rate fluctuates with time. Next is the annual percentage rate, which is very common in the credit card companies and credit care mode of payment. Here, the annual rate of interest is calculated as the amount of the total sum of interest spending, which is expressed on the total cost of the loan. The prime interest rate is the rate that is generally given by the banks to its favored customers or with customers with a very good credit history. Thus, this rate is generally lower than the usual lending or borrowing rate. Next is the simple interest rate, which is the rate of interest that a bank does for charging its customers. And lastly is the compound interest rate, which is generally used by banks to calculate the bank rates. It is basically made on two key elements, which are the interest of the loan and the principal amount. But why does interest rate really matters? One way that interest rate matter is that they influence borrowing costs and spending decisions of every households and businesses. Another reason why interest rates are significant is because the consumers will pay more interest on their loans.
Upon knowing importance of interest rate, let us now proceed to the advantage and disadvantage of interest rate.
One of the advantage of interest rate is, if the interest rate decreases, lenders have the advantage of making more money from their customers with high interest loans. And next, if the interest rate rises, then the borrower who has a fixed rate mortgage is locked into the lower interest over the life of the loan instead of having to pay higher interest rate of newer loans.
Next is the disadvantage of interest rate, wherein the potential borrowers are at disadvantages because high interest rate may drive up the amount of their monthly mortgage. Next disadvantage is that business owners often have to raise the prices of their goods and services when interest rates rises, thus making it disadvantageous for consumers. Now that we are done in the advantage and disadvantage of interest rate, let us talk about what is the effect of interest rate in our economy.
The Philippine Central Bank left its benchmark interest rate at a record low as it sought to keep monetary policy accommodative to support the economic recovery amid heightened COVID-19 restrictions in some areas. Economic activity has improved in recent weeks, but the overall momentum of the economic recovery remains tentative as the threat of COVID-19 infections continues.